Welcome back, my friend, to the Wealth Snowball, aka buy high, sell low. Sometimes that's how I feel. So I wanted to share with you one of the exciting, fun-filled things that I enjoy about selling premium and collecting dividends, and that is tracking it, putting out the old spreadsheet and just seeing how are you doing? How are these trades going? Especially when they go against you, with which I attract. I attract those positions. I don't want them, but I attract them. And here's a couple of examples, all on one particular stock, and that is Exxon Mobile, ticker symbol XOM. And this journey began in May of 2023. And I sold a put credit spread. Now you can sell a debit or credit spread, and it's simply just that you're either accepting a credit, which is what I like to do, or you're paying a debit in order to get into that particular trade. So in this case, we sold the 112 put strike price on Exxon Mobile. You know what? Let's see what the share price was on 5/1/23. You should have already had that like ready to go. Well, I don't really think any of these things through. I just click record. So let's look at Exxon Mobil. Bring up the chart. Let's check it out. Weak sell, huh? All right, fine. We'll be the judge of that. So right now we got the date of May 1st, 2023. Let's move this over here real quick. Let's look at 1 year chart and see where we were on May 1st. So here is May 1st. So on May 1st, it went, well, that'd be April 28th. So this is why I entered the position. From looking at this chart, I know how my mind works. It's not always great. So on the 28th of April, we had a really nice price of 118.43 on Exxon Mobil. And then they went downtown to Chinatown on the 1st of May to, looks like it went all the way down to under 110. So it was during that day where I'm like, it can't go down any lower. So I'm going to collect some premium by selling a put credit spread. So I thought it would be, well, I've only got $3 difference, right, between the 112 put that I sold and the 109 call or 109 put that I bought as protection. So it was $3 wide on 500 shares. Okay, so 5 contracts. Each contract represents 100 shares. That's 500 shares. $3 wide means that I only put up $1,500 in collateral, and I collected $255 for doing so. So on paper, that's no brainer. Well, unless it continues to go down, which is what Exxon Mobil did, as we can see from the chart. It continued to go down. It went all the way down to 103 and change on May 15th. So it just was going downtown to Chinatown. And in doing so, we decided we were going to really roll the dice and take our chances. So that 109, so the 112 was the obligation to purchase the shares at the 112 share price. And then also when we bought the 109 protection, it's the right, but not the obligation to take shares at 109. So what we did is we sold that right, sold it to close at the 109, and we printed a bunch of money, $1,550 for doing so. But we still had the 112 in our pocket, and then we rolled that 112 down here on May 5th to 111 and collected $195. We went ahead and said, well, I think Exxon's going back up, because you know how we think, what goes down must go up. And for me, that certainly doesn't always work. And it didn't work in this case. And it took me a long time to get out of the position. So on May 17th, I was assigned those 500 shares at $111. So I paid $55,500. And then what did the price do? Well, we know it continued to go down. So I really got risky and started selling calls under what I paid, with the idea that I would collect some rent from this position while I hopefully chased it back up. And that's luckily how it turned out. But you can see the dates, okay? May 17th, 19th, 23rd, June 1st, June 7th, June 21st, into July. And we're just chipping away collecting these dollar bills, right? These are the premiums that we were able to collect. Then we got up to the 111 and we're like, hey, we're doing okay. Let's keep rolling it and make a few extra dollars. So we wanted to do also is lock in a dividend. So we did so. We locked in the dividend, let our shares be called away on September 1st, 2023, sold them for what we paid, $111. So we made no money on share appreciation, but we did make money on premium and dividend. So let's see exactly how we did as far as the total is concerned. So let's go to the sum, and we end up with $4,265, okay, on our $55,500. We added up the number of days we were in the trade, which was 122 days. So let's do the annualized math just to see what we accomplished during the 122 days when we got into a bad trade, right? So we take what we made, divide it by, we don't divide it by that. So we had 4265 divided by 55,500. And then we divide that by the number of days in the trade, 122. And then we annualize it by multiplying by 365. And we end up with essentially 23% return during that time frame. So that is a very nice. Let's put it on the board. So let's go with 23% return, and let's even highlight that a little, put a little green on it. Got 5 on it. Let's put the green, maybe even do that with the bold. So got into a bad trade and then was able to fight for our right to profit by working the trade for 122 days. So that's 4 months worth of battle, and we were able to accomplish that even though we didn't accomplish any share appreciation. So that was round 1 with Exxon Mobile. So then comes round 2. So you can see I took a little time off of Exxon Mobile. Then I'm like, hey, I think it's good at 105. It seems like a interesting number to collect some premium on. So on November 6th, I sold 5 put contracts at the 105 strike price, aka share price, collected $300 for doing so. On 11/7, I'm like, hey, I'll do more. So we know what that means. This thing was going against me. So let's go to 11/6 on the calendar here. And I'm sure what we're going to find is that it was going against me. So there's 11/6, and there it is. So I'm selling 105s up here around 108. And then it went whoop all the way downtown to Chinatown and continued to go down, as we can see, and we will see in this spreadsheet. So another trade that I got into just at the wrong time, but then we worked our butts off in order to try to facilitate a profit, or as we say, fight for our right to profit. So to hedge some of our situation, we sold the 103 strike price, 3 contracts, collected $150 there. And then we're like, hey, let's buy some also. So we bought 200 shares at 104.10. We sold 7 call contracts at 106 and collected $504 for doing so. It continued to go down. So we're like, we'll just buy into this. 102.23, we bought 300 shares. Now we're up to 10 contracts on the calls. Collected $410 there. A couple days later, rolled it down from 106 down to 105, so even more risk. Collected $450 for doing so. Then we went on a buying spree on December 5th. So that day, it was just, playing chutes and ladders and going down the slide on us. We bought 300 shares at 186. 200 shares at 166, 200 shares at 143. Then the following day, we're like, let's continue this buying spree. 300 more shares at 99.73. The following day on December 7th, 300 shares at 98.40. Collected a dividend, which wouldn't have been on all the shares. It would have been on shares prior to the ex-dividend date. So we collected $665 on the dividend. We sold 23 call contracts on the 18th at 105. collected $598 for doing so. And then on the 29th, we weren't done buying yet. We wanted to round that number to 3,000 shares and lock in the next dividend, which is what we accomplished. We bought 700 additional shares for $99.65. And then we had a total, if you look over here, next to my big head, move it over just a little. Yeah, there it is. Move it right there. So we can get a glimpse here. So we had $303,630 invested in those 3,000 shares at an average of 101.21 per share. Then what we were seeing is the future looked like the price was going to go down on Exxon Mobile. So on our 105s, no, so those expired, and then we just sold outright on January 3rd. Confusing myself with my own spreadsheet. So on January 3rd, because the chart was saying, I think it might be going down a little, we did finally move out of a trade and not into a bad trade. We moved out of a bad trade by selling, and it wasn't a bunch. We sold at 102.92, so the share appreciation was the difference between that 101.21 and the 102.92 for a total of $5,130 in share appreciation. So if we add up this total, we ended up with, if you're looking at the spreadsheet, you already know what the answer is. $8,207 in cash in our pocket in 58 days. We're 58 days into the trade. So there's our math formula. Let's do the math right here. So it was $8,207 divided by 303,630. So that's not a great deal of money to make on that big of a position. We were in it for 58 days, and then we annualize it out 365 days to end up with 17%. So not horrible. I'll take 17%, right? All day, every day, and twice on Sunday. So that is 17% on our second time around. Are you telling me there's a third? Yep, I am, because we're currently in it. Okay. So that was position number 2. And we actually called that one right, because if you look, we sold on January 3rd for 102.92, and then we started buying again just 6 days later. We bought 1,000 shares at 99.65. The following day, January 10th, we bought 1,000 shares at 98.89. We even sold some puts at $97, 10 contracts, and collected $540 for doing so. And that was on purpose, because if you look, these were 117 puts, and they expired on the 19th, so it was only 2 days. But I was to find out if we can even lower our cost basis even more and get paid to do so, and we did. So we did get assigned those 1,000 shares at $97. So now we're at 3,000 shares, and our average cost basis is $98.51 per share. Okay, so that is that. Let's continue on and see what's up. So right here, on the 23rd, we sold 101s, 30 contracts on covered calls, collected $1,740 for doing so. We rolled it on the 1st from 101 to 103. So on 3,000 shares, you're adding $2 per share times 3,000. That's adding $6,000 to the bottom line, 30 contracts, and even got paid to do so, $295. There's our not monster dividend. Now I haven't been paid this yet, but that's when I locked it in. I don't think I'm paid it until, let's see, when am I paid that? I think it's the 3rd, or I think it's the 11th of March, but let's look. Exxon Mobile, it should be pending, and there it is. It's actually right there. It is the 11th. Hey, sometimes you got a pretty good memory. So there, where'd it go? Went away from us. We have a dividend pending. I know you're here somewhere. Go back to this. Go to the top. There it is. Okay. March 11th, we will receive that money, but we locked it in on X dividend date. So I put it into this spreadsheet just so it wouldn't, because it's not going to affect our days. It's not in the spreadsheet going to affect our days in the trade, because we're potentially going to be out of the trade before we receive that money, but we've locked in our right to receive it, which is $2,850, which was locked in on February 11th. Now, on the 27th, we rolled again. We rolled from 103 to 104, adding another $3,000 to the bottom line, and we got paid to do so, $264. Now, we have on the board now, expiring on the 8th, we have 10 the 104s that expires on the 8th. So I went ahead and put that line in here just to see what it will look like if those shares are called away. And at this rate, they likely will be, because Exxon Mobile is trading just over 105 as it closed on Friday. It doesn't mean it's going to not go down and be under the 105 mark, but what the charts show me is that it will remain over the 104. Those shares will be called away. So they'll be called away for $312,000. We have $295,530 in it. That's a difference of $16,470, which is this number here, which is our share. Wait, that wouldn't be total. So that's share appreciation. Add it all up, and we end up with sum of all parts for this round at $22,159. Hey, not too shabby, right? So there's our math setup. $22,159 divided by the investment of $295,530. 59 days in this trade. Let's get out the abacus and do some more math. 22,159 divided by 295,530 divided by 59 multiplied by 365. Now we're talking 46.3% annualized return on this position. 46.3% and highlight. Let's highlight that so we feel really very nice about it. So if you look at these three positions, three different tranches that we've worked through, three different trade pockets on Exxon Mobil, 2 out of the 3 were actually bad trades to get into, but we fought our way out because, we got to fight for our right to party. So what is the total on all of that? Well, I've already done that math for you. Where is it? There it is. Leave it to you, Bart. Yes, indeed. So we collected $34,631 from our friends at Exxon Mobil in a total of 239 days. And I didn't work a day there. I didn't work on a rig. I didn't work in an office pushing paper. All I did was invest in their shares, sell premium, collect dividends, fight for my right to profit. And in 239 days, we collected $34,631 bills on what were bad trades. 2 out of 3 of these tranches were bad trade beginnings. So that is what I wanted to show you on this video. I hope you enjoyed it. I apologize for never rehearsing or even having notes, but it's just you and I talking. We're becoming best friends in stocks, options, and dividends, and this is what we have on the Exxon Mobil. And you know why I invest in the oil? I've told you this before. I'll tell it to you again, and that is because Exxon Mobil and oil and the fossil fuels, their death has been greatly exaggerated. They're going nowhere. There's many, many years remaining in fossil fuels, and companies like Exxon Mobil, Valero, ConocoPhillips, all of the sweethearts that we trade, Devon Energy, etc. There's still decades of them making a lot of profit, and I want to be around for it. It doesn't mean I'm not willing to take risk off from time to time, because I will let ExxonMobil go at the 104 as of this moment. I changed my mind, but I'm currently fighting. If you've been watching, I've been fighting my EOG trade. So that's going to be another spreadsheet that hopefully turns out roses, because right now it doesn't smell like roses at all. In fact, here's our position, 119.36 average cost on 3,000 shares. And it's finally back up to 116. Because if we look at a month's worth of this, it went, downtown to Chinatown. It was, woo, woo, hey, we're making our way in the world today. Takes everything you got. And then it reported earnings, and it slid down the chutes and ladder down to 111. There was even times where it was in the 110s during intraday trading. And then we've basically fought it back up And finally, in fact, we had 116 calls on the board, and we rolled them right before close to 119, and we collected a few bucks for doing so. Where's it at? Where are you at now? Oh, that was more than a few bucks, $960. So we got that going for us. In fact, that reminds me, I can show you right here and right now. Whoa, don't look at that. That was supposed to be a separate video. How many times have you done that? You've ruined it for us by showing it in advance. So yesterday ended up being a great day for us in the positions that we own to sell covered calls. In fact, we collected $4,158 for doing so, and I could do a separate video just on that, but there is a spoiler alert. That's what we collected. So there's our Exxon Mobile spreadsheet. I'm not done with Exxon Mobile, but I will likely be done with the third tranche on Friday when those shares are called away, but I'll be looking for another entry. So if I sell at 104, it's at some point going back down into the double digits. So if I get back in 98, 99, whatever, I will do so, and then we will go from there. Maybe I'll get back to sharing my thoughts on the charts on oil, etc. My hesitation is always if you actually believe me. Then you get yourself into a bad trade like I like to do over and over again. But if you do stick with it, you typically can fight your way out. Thanks for tuning in long in the tooth on this video. Enjoy a wonderful weekend. I have exciting day today because guess what? Formula One is back. Enjoyed watching the qualies yesterday. My man, my favorite, oh, here he is right here. My favorite race driver, Max Verstappen. He, despite the rumors that Ferrari and Mercedes and who else, a couple other teams, the word was it that the Red Bull's dominance might end this year. I don't think that's the case. Max Verstappen qualified P1, so watch for him to win that race today. It may have already happened because I know I like to watch qualies and the race recorded. So I'll be watching that soon, enjoying the sport being back in business. And no, I'm not a bandwagon guy. I started liking Max Verstappen, and he became my favorite driver, I don't know, 4 or 5 years ago when he was probably ranked number 3 or 4. So now he has won 3 consecutive championships, and he is number 1, and I think he'll do that again this year. But if you've never watched that sport before, check out the docu-series. I think they have 4 or 5 seasons now called Drive to Survive. Start with season 1. I had never watched one lap of Formula One in my life, and during COVID, I began watching that documentary, and I was hooked, and I've been hooked on the races ever since. So have a great weekend. Watch some Formula One. Like this video. Subscribe to the channel if you haven't already done so. Leave me a lovable comment and share with a lovable friend. I'll see you in the next video.